Money Masters and Treasure Hunters, welcome to the November 21st Thankful Thursday edition of today's Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom while he is away in Las Vegas at the Traders Expo out there. If you're not familiar with me, I'm the morning anchor here at TFNN. I kick things off each day, 9 a.m. for the first 2 hours of the trading day. I use a set of trading tools, including leading indicators such as that lightning bolt pattern. We call it the A to B equals CD, Fibonacci, expansion, and retracements. Of course, the combination of those two patterns, they set up the Gartley butterfly and the sell patterns out there. I take a look at swing points, volume analysis, divergent patterns. I've created my own set of momentum indicators that allow us to understand the message and the momentum of the markets. The market's made up of bulls and bears, or what I like to refer to as sign makers of the markets. And my role is to help you to interpret their signs via Japanese candlestick charting. And we'll do all of the above over the next couple of hours. I've got a newsletter service called Mastering Probability. It's out each morning by 8 a.m. and it covers the futures, the Forex, commodity, stock markets, with all the trade setups and potential possibilities out there. Up-to-the-date market call information to help you start your trading day. But, folks, this show and this next hour, it's all about you. I treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, truly, that's what it's all about. So let's go look at one of our tools. This is the tool I call a smile breeds a smile. You know, smile and the world smiles with you. Everyone, and I mean everyone, likes to be around someone who smiles. Two strangers can pass in the street, and if one of them smiles, the other is likely to smile in return. Test it out for yourself. I guarantee you it works. And smiling is a gift that we can pass on to everyone we meet, let alone a gift that you will give to yourselves. And the only cost of that gift, well, it's just a little effort, exercising those facial muscles out there. A smile, folks, it's contagious, and it starts with you. Let's go check out these markets as they were smiling at the bulls. Our call number is 877-927-6648, and I'm here to be of service to you. We had the Dow finish up 109 points over the 16,000 mark, closing out at 16,009.99. We'll call it 16,010. The S&P closing at 1795.85. That was up 14.5 points. Composite leading, it was the Russell 2000 leading the charge, up 1.8%, up a full 19 points. That closed out at 1119. Of course, that had been somewhat of a weak index out here. Not today. It was strong. We'll take a look at volumes. Volume's pretty weak out here. Nonetheless, we'll take a look at all the chart patterns. We'll take a look at it daily, weekly, and monthly, just to get an idea as to where the market is at, what it's doing, why it's doing it. Apple was up $6 today, closed out at $5.21. Google was up $11. That was up over 1%. Priceline leading the charge, though, up another $12. That closing at $11.59. As I mentioned, Google up $11. Netflix up about $9. Green Mountain Coffee Roasters, they were enjoying They were not on decaf mode today. They were on espresso mode. They were up about $8.74, up 14%. Chipotle Mexican Grill, they were up $7 this morning or today. Vauxhall Jet having another tough day. Leader dollar-wise on the way down. That was after a pretty nasty session yesterday, down another 13, almost 14% here. Liquidity Services, sorry about that. They were a little Liquidity Services today, coming back with 19%, big volume off $4.87. Rocket Fuel, Rocket Fuel was Rocket Fuel to the downside out there. It was down about 8%. Intuitive Surgical off $4. GameStop down $3.64. Again, our call number 877-927-6648. Let's start off by taking a look at the S&P 500. So closing out the day at 1795.85, closing inside the swing point high from November 18th. That says, okay, it wants to go up and test the highs. That high out there, 1802.33. 1802.33, number one, it's on a daily chart. It's a resistance area. It was a key reversal session. It was a bear sash type candle out there. And so resistance being 1802.33. Doesn't look like it's going to have too much trouble getting over that resistance. We're going to take a look at the reason why. As far as where is it going to head to, we're going to take a look at the longer-term charts. But what changed between last night when I did the show, and today when I'm doing the show out here. Well, the big change came overnight. The biggest change came overnight when we've got all of the printing countries out in full force. We had Japan saying that they've got conviction behind their printing presses, and what we saw was a substantial change in my favorite currency pair. It should be your favorite currency pair as well, and that is the Euro Japanese yen. So we take a look at the Euro Japanese yen. Remember yesterday when we were on doing the show out here, it was about 10 o'clock, 10:30 in the morning yesterday, where we saw this currency pair begin its reversal. And we had seen two other bearish engulfing sessions up at this consolidation high out here, that consolidation high being right around the 135.50 level. You had a bearish engulfing candle now, which you like to see on any type of reversal signal, folks. Let me teach you something. Maybe you already know it, but let me teach you something if you don't, that is the absolute best advice before you get into any trade out there. And that is what we call wait for a second opinion. Waiting for a second opinion, that'll save you more money. That'll make you more money than anything out there. Second opinion means you want to see follow-through on that very next session. Well, we didn't get follow-through to the downside on that very next session. Instead, what we have today is the Euro-Japanese yen currency pair right now trading at the top of its session out here with a wide-ranging bar, absolutely wiping out yesterday's bearish engulfing. But more important than that, closing above the consolidation. Now, when you get above a consolidation, what often happens, at some point in time, it's going to come back and it's going to test that area. The real key here is going to be when that retest occurs, does it stay out of that consolidation? At this stage, what we know is that this is really a real breakout. This breakout here is up and over every bearish reversal signal at the top of this consolidation. So, old resistance really was yesterday's high. And that high out there, 135.93. You come in tomorrow or in the evening, if all of a sudden you see a that is trading below 135.93, that says that what it should do is come back and test the high about 135.50. If it starts getting inside the 135.50, this will be considered a false breakout. So we want to be paying attention to this currency pair. At this stage, this is telling us that this is the real deal, the real McCoy out there. The buying opportunity inside the markets would be, because they're right now on an intraday basis, they're very much in the overbought territory. So a pullback is likely. But right here, while we've got a breakout, what you should be looking for until this pattern here fails is an opportunity as far as where you would come into the market. And the ideal setup here, where yesterday what we were looking for is the ideal buy was a nice scary move to the downside in the markets based on yesterday's candle. And that meant that we were going to go ahead and take a look at buying the market here. I didn't say shorted, buying the market yesterday when it got down to the bottom of the consolidation. Well, that deal is off. And that deal is off because of this breakout here. Now, if we go take a look at the monthly chart of the S&P 500, we're going to start with the monthly. We'll take a look at the weekly, because it's important for you to understand what the market is communicating to us. And if you're, just listening to us on the radio or your mobile device at TFNN.mob, I appreciate that. Let me describe to you what it is we're looking at. It's a monthly chart that takes us back into good old 2000. Now, in 2000, what's different about the highs that we're experiencing right now in the market versus 2000 and 2007? Well, it's a pretty significant pattern out here. In fact, it's one that calls the tops many times. If we go back and take a look at the high on an intraday basis on a 30-minute chart for the ES Mini, the high that was made a few days ago, it was the same pattern that we're going to look at right now. It's called price relative strength divergence out here. When the market makes a higher high, and it does it with less relative strength, and is followed up by a bearish reversal candle, it's telling you that the market is getting ready to retrace, correct something different. In this case here, when the market made its highs back in March of 2000, we saw just such a pattern. In fact, the actual reversal came right here during September of 2000. We got their first reversal signal, a bit of a bearish, not a bearish engulfing, a bit of a bearish reversal signal right here in April of 2000. We had a little bit of follow through the following month, but the real reversal candle, that came in September of 2000. We can see the exact same pattern that occurred here in 2007 as the high was being made in October of 2007. If we take a look at where the markets are right now, we do not have that same pattern. We do not have less relative strength. If we take a look at July of this year, RSI was up at 74.43. Right now, today, we're at 75.59. We'll see that same pattern at some significant high. May not be till the S&P gets to 2,300. Right now, closed out at 1795.85. We'll be right back, folks.